Hi, this is Lara at Elliott Wave Gold with your daily gold analysis done after New York has closed for Thursday 5th of September. I'm recording this video New York time, just gone 10 to 8 in the evening. I'm having another step back again and a good look at the monthly chart and looking at waves at cycle and supercycle degree. This is my main wave count because within this upwards movement the Fibonacci ratios are better than my alternate. This upwards movement of the last couple of months or so may be the start of a new cycle wave 5. At 1961 it would reach equality in length with cycle wave 1. The fifth wave should last at least a year and maybe longer. If we see price move above 1532.90, I will have a lot of confidence in this target. While price remains below the confirmation point, the alternate will also remain valid. If cycle wave 4 is not over here, if it continues further sideways as a double combination or lower as a double zigzag, then it can't move into cycle wave 1 price territory. Movement below 1032.7 would invalidate this wave count. And although I've tried to see it before, I don't really like putting the high of cycle wave 1 down here or any lower. I think this is where it fits best. Let's have a look at this structure on the daily chart, where the end of primary wave C down here is this point down here. I'm also looking at two different ways of labelling this downwards movement, although at this stage it doesn't really matter. From the start of primary wave C to this low here, it is a completed 5-wave impulse. There's just more than one way to see that downwards movement. This wave count here sees from this high to this low, intermediate wave 5 with a nice 1, 2, 3, 4, 5. And that has a pretty good look. The problem with this though is we have a big truncation here at the end of intermediate wave 3. It's certainly possible, it's technically possible, it just does look a wee bit odd. Either way, from this start of the upwards movement down here for this main wave count, this is the start of a new cycle wave up. We have a completed impulse here. When I look at this movement from about here up to here on the 6-hourly and 3-hourly charts, I am not seeing a strong increase in upwards momentum. So I'm going to go with this as my main wave count today, despite the disproportionate nature of this second wave correction to other second waves 1 and 2 degrees higher. If this is the middle of a third wave, we really should have seen a strong increase in upwards momentum. It is really common when third waves extend, they have to start with a series of overlapping first and second waves, so that may be what we have here. Within minor 3, minute 1, 2, within minute 3, minuet 1, 2, and within minuet 3, sub-minuet 1 and a deep second wave correction, which can't move beyond the start of the first wave. Movement below 1352.45 would invalidate this wave count. We will have confirmation at cycle degree of this wave count with movement above 1532.90. At 1545, minor wave 3 would reach 1.618, the length of minor wave 1. That target's some weeks away still. Let's have a look at this possible structure on the hourly chart, where the end of sub-minuet wave 1 up here is this point up here. The problem I had yesterday, and the reason why both of my hourly wave counts were invalidated by this downwards movement, is I was seeing this downwards movement here as a completed double zigzag, and I hadn't considered the possibility that it was a completed 5-wave impulse. I was expecting it was a correction that was over here, because that would have seen it nicely in proportion to the other corrections on the way up. This upwards movement here subdivides nicely as a 3, and from this high we don't have a completed 5 down. We need to see the final 5th wave complete. At 1357, microwave C would reach equality in length with microwave A. When we see this downwards movement as a 5-wave impulse, it has some really nice Fibonacci ratios. Sub-microwave 3 has no ratio to 1, but sub-microwave 5 is just 1.29 short of 2.618, the length of the first wave. Within this downwards movement here, the third wave is close to equality with the first, so we may not see a ratio with the fifth. So I'll use micro degree, not sub-micro, to calculate this target, and the target's not too far away from the invalidation point. I would also expect downwards movement to find support at the lower edge of this channel, draw it from the start of the correction to the end of micro B within it, place a parallel copy on the end of micro A, expect downwards movement to find support there and bounce off for the start of a strong third wave up. The daily chart for my main wave count, it's still possible that instead of a series of overlapping first and second waves in here, the third wave could have been over. However, this does not agree with MACD. The middle of a third wave should show an increase in momentum beyond that seen for the first wave, and we just don't have that. So this is technically possible, but it doesn't agree with momentum. The invalidation point's a bit lower though. If the main hourly wave count, the first hourly wave count's invalidated, then the invalidation point moves down to 1344.26. Instead of a second wave correction, it may be a fourth wave correction. Either way, it's a correction, and we need more upwards movement to follow it, because the upwards movement from this low to this low cannot be over here. We cannot see 1, 2, 3, 4, 5, because that would mean the third wave is the shortest, violating a core Elliott wave rule. So this is not a complete impulse, no matter how we look at it. We have to see more upwards movement. At the monthly chart level, it's all the same to this point just off to the left of the chart, and for this one we have cycle 1 and 2 down here, very brief. First wave, which certainly is possible, that's sometimes what first waves are like. An extended third wave, fourth and the fifth wave may have been over here. We may have had a trend change, supercycle, or maybe even grand supercycle degree. That's possible. This downwards movement, instead of being a completed ABC, may be 1, 2, 3. They have exactly the same subdivisions. What that means is this upwards movement could be a fourth wave correction, which could explain the lack of recent momentum in the last week or two. Primary wave 4 may not move into primary wave 1 price territory. Movement above 1532.90 wouldn't validate this alternate. It's an alternate though, because right in the middle of the third wave at cycle degree, in the middle of primary wave 3, there are no Fibonacci ratios here at intermediate degree. This may not be the only way to see this upwards movement though. I've spent quite a lot of time playing with all the subdivisions, trying to see a better fit that has ratios in the middle of the third wave. I haven't been able to see that yet, despite spending hours on it. It doesn't mean it doesn't exist, it just means I haven't been able to see it. But considering the amount of time I've spent on it, I'm pretty confident that this is the way we would see the subdivisions if cycle 3 was over here. The lack of Fibonacci ratios, though, right in the middle of it, really does reduce the probability of this wave count, because gold usually does show great Fibonacci ratios, especially right in the middle of third waves. If we have the start of a 5-wave impulse to the downside here, then this upwards movement is a fourth wave correction. This wave count would be confirmed with movement below 1032.7. At that stage, my main monthly wave count would be invalidated. Let's have a look at this on the daily chart, where the end of primary 3 down here is this point down here. So from the start of primary 3, the main daily wave count sees that as the start of a C wave, and the C wave and the third wave both subdividing as 5-wave impulses. There are more than one way to see this downwards movement though, and I'm having a look at another possibility here, and thanks very much to Joe Taverna for pointing out this possible triangle in here for me. If we see a triangle over at this point here, the E wave falling short of the AC trend line, it all does actually fit really well. We have a more complicated zigzag multiple for the C wave. I've checked the subdivisions of this downwards piece of movement because that's key to the difference in how I'm seeing this. This does subdivide either as a 5-wave impulse or a 3-wave zigzag. This movement is ambiguous, unfortunately, so both the wave counts are both valid. We now have no problem with the big truncation here, which I have for my first daily chart, but now from this high to this low, the 5th wave has a 3-wave look, so we've created a problem here and avoided a problem here. Either way, both of them are valid, and it doesn't actually make any difference to how we're seeing this upwards movement, and this is the key to figuring out what's going to happen next. This upwards movement, if it's a fourth wave correction, it's unfolding as a zigzag. We have a 5-wave impulse for the A wave, and a 5-wave impulse for the C wave cannot be over here. From this low to this high, it cannot be seen as a completed 5-wave impulse. So for this one, because of the lack of room for upwards movement, this downwards movement would be minor wave 4, which can't move into minor wave 1 price territory, movement below 1344.26 before we have a fifth wave up, would invalidate this alternate. This alternate also expects upwards movement in the short term. At 1436, minor wave 5 would reach equality in length with minor wave 3, and at 1440, intermediate wave C would reach equality in length with intermediate wave A. That gives us just a $4 target zone for more upwards movement, which must subdivide as a 5-wave motive structure. The fifth wave would end either midway in the channel or maybe about the upper edge of the channel, and primary 4 can't move into primary wave 1 price territory. Movement above 1532.90 would very firmly invalidate this wave count. So I've finally been able to see an alternate at the monthly chart level which allows for this upwards movement being a corrective fourth wave. Seeing it at primary degree resolves the problem I was having previously of the proportion. It's a new upwards trend after the downwards impulse, but if it's a fourth wave correction, it should be over fairly soon, and then we should see a fifth wave down. That's all for me today with your gold analysis, and I hope everyone had a fabulous day.